Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, April the 25th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimers as it talks about everything I say in these daily market commentaries is general commentary and should not be construed as investment advice. Basically, I don't know what's in your portfolios. I don't know what your risk parameters are, and therefore what I'm doing could be counterintuitive to what you're already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, not a whole lot going on. We actually even have an Italian bank holiday. So let's skip over here to the United States. The only thing we really got was crude oil inventories coming in at a build of 2.2 million barrels, expected to be a drawdown of 1.6 million barrels. So we're starting to see those builds in crude oil again. A couple of things to note about that. API is the one that I say don't really look at it. You got to look at the DOE because API came out with crude oil build also, but they also came as a drawdown in Cushing and a drawdown in gasoline, where the API number that came out showed a build in Cushing and a build in gasoline as well. 840,000 gallon build in gasoline. So the only thing we really saw that was more than API was the distillates, a drawdown of 2.6 million, expected to be, the API came out with a negative 1.9, so a little bit higher than what was expected there. But the big news is we have crude oil, Cushing, and gasoline builds that should cause downward pressure in the overall crude oil market. Yesterday, we did see that market continue to slough off ahead of today's data points. Finding a little bit of support here. On that number, we really started sliding, but we're starting to see a little bit of comeback in crude oil futures right now. Gold continues its slide for the last 4 or 5 days after, I talked about this about a week ago, started talking about this. Russia out there buying tons of gold. And as a matter of fact, some of the numbers are coming in. 300,000 ounces of gold is what Russia ended up buying. You know what that equates to? 2,000 tons of gold. So really hoarding that gold over there in Russia right now. So it looks like they've kind of, come off of that. They're taking a pause anyway as of right now. One thing to note with the, I'll talk about that in a second with the FOMC. We got Bitcoin coming off as, of course, it stumped me, came up and settled probably up around that 94.50 was right where I was saying. If it settles above that, that was going to indicate that the bulls had control. Well, I would say that they did have control. Today, though, we are seeing the market just slump, and we have a engulfing candle. So that is very bearish going forward. So, as of right now, I don't even know how this candle could trade in order to make it look like it was slightly bullish. I mean, it would have to blast off, and I still don't think that would look very bullish. So looking pretty bearish in Bitcoin after it just had to trade up to the point where I said it wasn't going to. Now we'll retrieve back down to my levels that I think need to be printed. All right. VIX moving higher as we've got yesterday. Remember yesterday when I was talking, it looked like it was pretty close to an inside day, but as we can see, after I got done with my daily market commentary, we were up against these resistance areas. Market just fell out of bed. As soon as a couple of resistances were not able to be breached, we just saw the selling pressure come in and take over the overall markets. And again, this is where we were kind of trading yesterday up in this area, finding it bouncing back and forth between these. I was saying, it's going to have a lot of support and resistances to get through. Once we got through those supports, the market just slammed down right to the 38 Fibonacci level. Again, today broke through it, but we are just hovering above that right now. So we're not out of the woods yet on the upside, or the downside doesn't have anything to celebrate, especially with this doji here settling above that Fibonacci level. That would be very bullish. And like the bulls had finally broken the bears. Again, yesterday came down, almost touched the 200-day moving average. Today, kind of kissed it and started bouncing back up and away from that. So if we can settle up here or near the opening, that would look very, very bullish, like we were finding a bottom here. Let's look at the E-mini S&Ps on the daily chart. This is 30-minute candles coming up here. You can see basically as soon as I got done with my daily market commentary, we were right around here. The market just slammed down as soon as we broke through those supports that I was talking about. I was saying with the extensions and the regular Fibonacci coming so close together, that was going to act as a major support area. And it did. It held a couple of times. But once we got through that, that's when anybody that was trying to get long on that area was dumping their positions on their day trade, and that accelerated us to the downside, made the VIX pop a little bit. Today we're getting a little bit of continuation to the downside. You know, we're seeing it start to get a little bit supported, but that's still going to drive the VIX up a little bit. All right, let's talk about some earnings that I did so I can get this done relatively quickly and get you guys out of here. All right, in AMGN, I went in and did AMGN only in my margin account. I did a call spread in there. I did not. I actually was playing around with this because I wanted to see a little bit, further out in duration. I want to play around with some longer duration earnings trades for my IRA because that defined risk aspect. I want to be able to, when I take off the short strike, leave on that long strike, and want to have a little bit longer duration. I was just playing around with some theta decay and stuff like that just to see it in real life rather than in theory. But in AMGN, I went into the April that expire on Friday and sold the 180 calls for originally, I sold those 180 calls for, I'm going to have to double check that because I don't have the 180 calls right now. Where did I get those? I'm going to have to check that, but I think I did the 180 calls a little bit better than this. Anyway, the 180 calls I originally sold for around, it was the 180 calls I sold for around $1.50. I ended up being able to buy those back for 17 cents. And then in the May, I went out and sold the 185 calls, so it went a little bit higher, sold those for 81 cents, bought them back for 71 cents. So you can see that the theta did not really help me in that longer duration. I was thinking I might be able to get about 35 cents or something like that for it, but wasn't able to get to that for that trade. 84 cents. On the 180 calls, I sold those for 64 cents. On the May 185 calls, I sold those for 81 cents. So bought back the 180 calls for 17 and bought the 185 calls in May back for 71. So didn't do very well there. And as you can see, the 180 calls that were nearer in duration decayed quite a lot more than the ones that were in the longer duration. So just playing around with a few things. Gearing up for my IRA for the most part. So I only did that in my margin account. And Boeing, I couldn't decide what direction I thought they were really going to go yesterday with a big sell-off. I wanted to play Boeing to the upside. They had a lot of orders. We've been talking about that Airbus with the tariffs and stuff like that. People were canceling orders, going with Boeing. I thought that they were going to do very well with that. But with the overall bearishness in the market late in the day, anybody that came out with better than expected earnings might still fail. And what we're seeing here is people did come out with better than expected earnings pretty much across the board, but their forward guidance is not looking great. And something to note about that, we've got the FOMC next week. That's why we're not seeing any Fed governors really talk today about monetary policy or this past week. They're talking, but they're not really talking about monetary policy. But having said that, they're not going to go this month. The next one that they look like they're going to go is in June and then possibly in December. And both of those are still up in the air on data-dependent moves. So we were starting to see some of this kinks in the armor, remember, overseas. Now we're starting to see forward guidance out of these companies not looking as rosy as we once expected. And that's causing a little bit of this market to kind of peel off a little bit. So in Boeing, I did this strangle in there and I went into the April weeklies. I sold the 300 puts and then sold the 350 calls to create that strangle. I originally collected $3.24 for that. I bought that strangle back for 86 cents this morning. So nice, stayed right inside. The market maker move was something like $16. We had a $13 move yesterday alone, and then it settled right inside of that, as you can see, inside day. So that was a perfect setup for a strangle. Now, Hess Industry is another one that I added to only my margin account. All three of these last ones are only in my margin account. And I went into Hess Industry. I wanted to play this one to the downside. So short deltas. Went into the April again. Sold the 61.5 calls in there. Only for 29 cents. Bought those back for 15 cents this morning. So a little bit of a winner. But on the open, you can see this market really started selling off. And that's why I was able to get those relatively soon and for a pretty good price. You can see we've started moving. With the theta decay and everything else, it doesn't look like it's going to make it there. You probably could even maybe do that a little bit better than where I got out. All right, finally, WYNN. Playing this to the upside as well. I thought WYNN was going to do very well. I got out of this right on the open. As you can see, overnight came off, but I was far enough away that I did okay on these, and I did them in the April. It was before the big sell-off. It was in this candle. We slammed down, was working it for a little bit. I think it rallied up to about here, and that's about when I got out. And then the market started selling off again. So I tried to cover this one. This was one of the first ones I tried to cover because I was directionally wrong on it. So I jumped on this in both my IRA and my margin account. So let's continue talking about my margin account. In the May, I went out a little bit further. Like I said, I was playing around with these different strike locations. I went in the May and sold the May 170 calls in there for $1.93. I was able to buy them back for $1.80. A little bit of a profit, but after all the commissions and everything else said and done, did not work out too probably well compared to what my IRA was. And in my IRA, I went into the April, so the ones that expire on Friday, and sold the 175 puts in there in my IRA, cash backed, for 120, and then bought them back for 25 cents. So obviously did much better in my IRA than I did in my margin account because I went out a little bit further, wanted to add that risk to it just to see how things worked out. And it worked out okay. That's it for today. That's all I've done. I'm going to be looking at some more earnings trades for this evening. Follow me on Twitter. I tweeted all these trades out, what I was doing, the strangle and bowing and short calls and all of that stuff. Know the strike location by looking at the webinar for earnings, you guys. Really important for all my rules on earnings. I've been playing those out. As you can see, all of those, even if I was directionally wrong, we're still winners, albeit not the biggest winners I wanted to see, but they were winners. And as a matter of fact, I would call a scratch a winner any day of the week, especially on earnings. But I did make money on all of those, so I'm very happy. That's it for today. Check out Friday's webinar on the short calls. You saw me doing short calls. Where do we pick the strike location? How do we know for earnings? How do we know for regular trades? When do we do this? How do we decide? I'm going to talk about all of those things. Also, give me a thumbs up or a thumbs down, like or dislike on this video. Comment, especially if you give me a dislike, so that I can learn from it and maybe make some adjustments. All right, so check it out. Go to ProTraderStrategies.com. Sign up for that webinar. And if you can't take that, take it easy.